would have expected them to be. Do you think that that's just partly a lag effect which will play out over the next couple of quarters and things could be worse than what they're looking right now?
Actually, I would say that is not true, and the reason is that these couple of quarters you've faced the brunt of very high commodity prices, and you really haven't seen any impact of a decline in commodity prices, whether it's steel, aluminum, and so on. So going forward, at least margin pressures should come off. You might see a little bit of slowdown on the sales side, but even so, I think the margin expansion will be key in driving earnings rather, because of lower interest rates and commodities coming off, rather than, a slowdown, a further slowdown.
Right. Nandita, you've, again, been a fairly strong votary of the fact that, build a long-term portfolio. Now, this show seeks to reach out to retail investors and tries to tell them how you really should be investing for the medium to long term, rather than trying to time the market on a daily basis. In that backdrop, right now, what would you be doing with your portfolio? Would you be building on it, given the valuation? Some of them are very attractive. Or would you sit out and say, look, let me kind of enter 3 months, 6 months down the line when the pain has totally played out?
Yeah, I mean, it's a question of, can you time the pain that's completely going to play out? If you look at how foreign institutional investors are viewing emerging markets, a lot of them are looking back at 2008 and saying, okay, things got really bad, but we didn't come out and invest in 2009. And a lot of people missed the rebound that happened in 2009. And in a lot of ways, the way this year has played out has been similar to 2008. In fact, if you look at the broad market, the valuations have been decimated across a lot of sectors, infrastructure, the public sector banks, a lot of the real estate plays. And you know that, in this country, asset plays sooner or later will play out. So I would say start building a sort of more of a value-conscious portfolio. Be more aggressive when the rate cycle, turns on you, and you will see indications of that in the next couple of months. And no one can time it perfectly, but I would be interested. I think that invested. I would say that retail investors must invest in with a much more longer term investment horizon. There's a lot of data now available in terms of how companies have behaved in a stressed environment. And there's very good information and research available. Use that to build a long-term portfolio. And a couple of years down the line, we'll be looking back at this opportunity and saying, why were we worried so much on a day-to-day level basis on nifty levels? And so you have to really look past that and get out of this very short-term trader driven sort of mentality and really think in terms of an investor, in terms of a wealth builder. That's the message I would give to investors.
You've been fairly positive on the Indian auto and the banking sectors, Nandita, and does that view still remain, or would you feel that there is some pain there? You mentioned a bit earlier about the public sector banks, concerns being there on their NPLs. They've been battered out of shape. Autos, there's been a genuine slowdown. Are these two sectors you still believe in?
I do actually, but I'm very, our approach in India is very stock selective, and even within these sectors, we have been invested more in the two-wheelers in the auto side. In the public sector banks, I would say, it's time to buy selectively and to look at, this quarter has been extremely revealing in terms of what the NPL picture looks like. So, all of the data is available for anyone to examine, and if you look at it, in holistic terms, On a worst case scenario, you're looking at NPLs of about 2.9 to 3% on a system-wide basis. Whereas if you think back on 2008, we were all worried about NPLs of about 4.5% for the banking system. So actually, we are better off in some ways. I think the confusion is that there has been a fair amount of infrastructure lending. People are concerned about how this whole this thing will play out. And my sense is that issues are being addressed behind the scenes, especially in the power sector. I would not be surprised if 6 months down the line, you will see a whole different scenario playing out for the power sector, where you have state electricity boards increasing tariffs and so on, and I would expect that to play out.
Do you believe that the consumer story...
So by the banks, which are trading below book, because clearly I don't expect, at least I don't expect a deterioration of the book.
What about the entire consumption story? I mean, FMCG, etc., Nandita, they seem to continue to remain at fairly high valuations, but still people seem to want to buy them at these levels. Is that a view you hold, that with the next 3 to 5 years, there's still value in those stocks?
Yes, they've really done a great job in terms of holding and building value this year in the absence of other investment themes in terms of resilience. But the consumption is clearly a very strong long-term play in India. Nielsen has estimated that consumption of food, personal products, and this whole area will grow 8 times in the next, till about 2025. So when you look at valuations, you look at, where these stocks have traded in the past and the potential for the future. And clearly these are, high ROE companies generating free cash flow. They don't need to be dependent on their parent or on the banking system to fund their expansion. And I think that's the key, and that's why the high valuations. So these are stocks, like Hindustan Unilever, which we've been very positive on, will continue to perform in this market. From time to time, I'm sure there'll be other themes that emerge, but I think this theme will remain extremely resilient for India, because we've just scratched the surface of what the rural economy can consume. And with the growing aspirations of India in the rural as well as urban areas, as more and more products are available, people will upgrade and so on. I think that this theme will be very important.
Nandita, you talked about the global factors, Europe especially. Of course, if things really go bad there, then we probably will slide even further out here. But if that doesn't happen, and if in the next 2 months, the point that you made, a lot of our local factors start playing out, reforms start kicking off, the tightening ends, inflation comes under a bit of a control, you would see a fairly strong trigger from the levels we are currently at, because a lot of this local news especially would have probably been factored in at the current levels that we are at.
Yeah, I would think so. I think that, a lot of the sentiment that has been so depressed this year will change on you. The daily barrage of negative headlines and the media, the story will change very dramatically, and, half the battle will have been won.
Okay, my final question, again asking from a more retail investor point of view, with a 3 to 5 year kind of a time frame, Nandita, a good portfolio in this market, according to you, could deliver what kind of returns? What does this market have in it?
If you look at the data since liberalization, this market has returned a compounded annual growth rate of about 16%, similar to the earnings growth rate of the Sensex. And I have no reason to believe that we can't generate the same type of returns going forward. I would say that we are in a very strong market from economy from a demographic standpoint. If government policies align with the aspirations of the Indian people, we can certainly deliver those types of returns.
Nandita Parker, thank you very much for coming by. It was indeed a pleasure talking to you. Thanks for sharing your thoughts with our viewers.
Thank you.
All right, that was Market Guru Nandita Parker. Let's take a short break. We come back and take your stock-specific questions on Talk Stocks.
In association with Samsung Smart TV, join in. Seagram's 100 Pipers, Pure Music CDs, True Legends. Murugappa, 29 businesses, one powerful group.